Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Friday, February 16th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Big picture first. Just a reminder that about 7 weeks ago, we tested a resistance area at 255.60. This week was in the low to mid 260s at that time. It was a targeted resistance area that we tested, and we had mentioned how it could contain monthly, possibly quarterly buying pressures, and that is obviously playing out. We'd also mentioned that when we were testing the 255.60 formation, that you should allow for the channel base that is presently at 170, 179 this week. We did test this a couple of weeks ago, this channel base, and now that we've tested the channel base, just the inverse. You should allow for 255.60 over the next 2 to 3, 3 to 5 months, depending. And that depending comes down to, in my opinion, to whether or not the market closes sooner than later above this 3 to 5 week objective at 210.99. So as we are testing this channel bottom, we'd mentioned that as we test it, 170, 170 on the daily chart, that you should then anticipate a 3 to 5 week recovery to the 210.99 descending 1/3 speed line that is based in part on the low that was put out a week and a half, 2 weeks ago. And so here we are. We've had a nice rally. And that was actually, we did have a buy signal on Wednesday's close. Thursday's was a sort of a rip roar. Rip roar meaning we actually pushed through and settled above this 200.03, 1.5, 2 week rising channel top. And so we didn't close above it by a wide margin. It does, though, indicate 210.99 sooner than later, possibly today. The question, of course, is because we're so close to this rising channel top, will we open above it or below it? If we open back below 200.03, it becomes day resistance that then allows 194.01 intraday. And quite honestly, I don't see this actually. I see 194.01 as a real possibility. But, if we break 194.01, is 183.08 in reach today? It is certainly possible. We've seen those days before, but I don't anticipate that. I do think a settlement back below 194.01 should yield the low 180s Monday, Tuesday. But if tested today, and I don't see it, 183.38 can contain session weakness. I have an up pivot next to it, as I mentioned in yesterday's video, that the settlement above this speed line at 183.38 should yield 210.99 as a 1 to 2 week target. Now, it could be 1 to 2 days, given what played out on Thursday. And if we open today above 200.03, it serves as day support that could yield 210.99 intraday. On the way up, we do have 206.27. That is this low. It is a kind of a gap fill if we test 206.27 today. I don't expect to contain daily highs, but it may well contain intraday buying pressures. We could ease back from here back to 200.03 intraday, trade inside that 200.03 to 206.27 region for much of the day, but pushing through 206.27 actually should yield 210.99 intraday. And at 210.99, we can top out into, possibly through March trade, fall back into the low 170s again within 3 to 5 weeks. As I mentioned before, we could trade inside of this gradually narrowing wedge between presently 170, 170 and 210.99 through March trade for the next month or two. But as I also mentioned at the start of this video, that you should allow 255.60 over the next several months, 3 to 5 months at the most. And in that vein, if we were to close today, I don't see that today, but it is certainly possible that over the next 3 to 5 days we could close above 210.99. And if we do, then we've got a 3 to 5 week target up to that 255.60 weekly channel top. So keep that in mind. If you're a 3 to 5 week swing trader, you may have been bottom picking the low 170s, mid 170s a couple of weeks ago. Bravo. And if so, if you're a 3 to 5 week swing trader, you're holding out for 210.99. Maybe you bought the 205 or 215 strike out of the money calls that I'd mentioned at the time that don't expire for at least a couple of months, 2-3 months out. And if so, and if we test 210.99 today, for instance, over the next few days, that would be your sign to take at least some, if not all, profits. You might even aggressively reverse if you're an options trader and then reach for 170 or 172 strike out of the money puts that don't expire for at least. I would go 3 months out on the expiration. I don't see that any more than a 3 to 5 week sell-off, but it could take longer, and you just don't want to bite your fingernails all the way down as the market, as decay begins to wreak havoc on your option premium. So there's that. But the last thing I will say about the upside is if we close above 210.99, and that should not come as a big surprise if we do, in my opinion, holding above the low 170s, the mid 250s, the channel top, I should have this marked, are sort of drawing the market. The question is whether the market will continue all the way back into the 250s or not in the coming weeks. And the answer to that is yes, at least for me, if we close above 210.99 in the coming days. And then it is, if you're not long Tesla already and your time frame is 3 to 5 weeks out or so, that is your signal to go long Tesla, because I do see the 240s, 250s as a 3 to 5 week objective. I say 240s. Possibly. Depends on the timing, but this 255.60 channel top is dropping on a weekly basis in sync with the channel base at 171.79. Let's take a look at the downside one more time. Closing below 194.01 should actually yield the lower 180s again Monday, Tuesday of next week. 183.38 is that speed line. It retains the ability to contain session weakness. We're going to change things up, though, just a bit. I can tell you that right now. If we do fall away from present price levels, there are new rising channel bottoms and such that we need to account for. That would be more, I think, reliable downward pivot points as we move into later next week. But for right now, I think if given the opportunity, and I doubt you will be, the 183.38 formation speed line able to contain today's selling pressures, and if settled below, should then yield the 171.70 channel bottom once again within 3 to 5 days or less, where we can once again bottom out on a monthly, possibly quarterly basis, and above which you can prepare for 255.60 as a 3 to 5 month possibility or sooner. That could mean reaching once again, if we slip back into the low 170s, reaching for 245, 250, 255 strike out of the money calls that don't expire for at least 6 months. You might even go a year out. Now, the last thing I will say is the downside scenario that is not going to happen today. But if we did close the week today below 171.79, it would really need to be by a 1% margin for what I consider to be sell signal reliability. And with that 170.07 settlement today, which is not going to happen, we would then anticipate 2 to 3 months bearish continuation into the very low 100s. And under that scenario, you should liquidate any of those out of the money calls you may have purchased, and in turn reach for, say, 100 strike out of the money puts that don't expire for at least 6 months. But that is a scenario that is so far off the mark right now. We are recovering as anticipated off that 171.79 channel bottom. The 210.99 3 to 5 week target that was established about 2 weeks ago may actually be reached over the next few days, so long as we continue closing above 200.03. I see this as like a Friday, Monday test, 210.99. Today above 206.27 over the next couple of days, so long as we continue holding 200.03. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. You won't regret it. And if you do, you can bow out after 5 days at no cost to you whatsoever. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.